welcome back after a break, and now it's time for me to launch the panel 2 of the second day, which is entitled The Legal Framework, Purposes, Intended and Unintended Consequences and Risks. The panel will be chaired by Dr. Lorenzo Pascoli. Lorenzo is Associate Head for Research at Coventry Law School and is also the co-investigator of the VIRTEU project. Dear Lorenzo, the floor is yours.
Thank you, Costa. Thank you, everyone. Well, first of all, let me thank Costa for being a phenomenal life force and leading force in the project. I think you all can see through this conference the phenomenal results that I have to say he collected and he gathered for this project. His amazing networks and phenomenal energy have really been the driver of this successful project and event today, which concludes the project and celebrates all the time spent together. I'm very happy to be also with a lot of friendly faces, people we worked with, people that attended or contributed or participated to the workshops, advised us in many capacities. So it's great. It's a nice occasion. It's a nice way to celebrate the conclusion of our works. Now, moving on to the panel that I'm going to chair very quickly. The panel concerns the law, so the legal framework. And we want to focus particularly on two different angles. On the one hand, the intended consequences of the law, so the purposes, the objectives, and whether the law actually fulfills these objectives, but also the unintended effects, so the consequences that are unexpected, that are not planned, that are not being kind of foreseen, and perhaps amongst these consequences there can also be the causation of crime, the facilitation of crime. So we are very interested in these two main aspects. We have with us some panelists that are exceptional, starting from Professor Nicholas Ryder, who is also a friend and has contributed to many projects together, Sam Bolton, who's also collaborated with us in many occasions, Rachel Cook and Deepret Danoa, who have also attended and contributed very extensively to the national workshop based on the UK. Now, the scheme is exactly the same as the previous session, so I will let the floor to the speakers one by one. They will speak for roughly 10 minutes each. I will tell you when the time is up. I'm sorry to be a very strict policeman in this respect, but the time is really essential here. And then we will have 15 minutes of Q&A in the same mode that we had in the last session. I will present each speaker before they start speaking, so you have an idea who they are immediately. So moving on, I won't take any more time. Let's start with the first presentation, which is a presentation by Professor Nicholas Ryder on terrorism financing, drugs, fraud, and the exchange of information. What did go wrong? So Nicholas Ryder is Professor of Financial Crime at the University of the West of England, Bristol. He's been there for a long time, and his research has been informing a lot of policy strategy from private practitioners, but also public bodies around the world. I have a list here. So his research has been commissioned by Innovate UK, the Economic and Social Research Council, LexisNexis Risk Solution, the City of London Police Force, ICT Wilmington Risk and Compliance Universities, Southwest, the France Telecom Group, and the European Social Fund. But I think this list is not complete because I know Nick very well, and I know that he's done much more work, including very recently for the Law Commission. Nick is a leading scholar on the issues of financial crime, and he published really countless, literally countless publications, including some books. We co-authored together 2 books on corruption, and he also co-authored the book The Law Relating to Financial Crime in the United Kingdom, which is a landmark publication for everyone interested in this topic. So my presentation is done. Nick, you can go whenever you're ready. Thank you.
Thank you, Lorenzo, and I don't know much I have to pay you for the very kind introduction, but I'll happily have a chat to you later, send you a couple of bottles of champagne. Hello, everybody. Thank you for inviting me, Costa, and many congratulations on organising the conference. I will happily share the screen with you, and I appreciate I've got a very tight deadline, and hopefully you can all see that. Brilliant. So, this is an ongoing piece of work, terrorism, financing, tax fraud, exchange of information, and sort of what went wrong. So it presents, sadly, a rather disjointed sort of policy appraisal of the UK's regime. Briefly, the work is funded by Hmrc, Innovate UK, and our partners, Synologic, so I have to get that out of the way, I'm afraid, in terms of the research funding. In relation to the abstract, very briefly, this is currently about a 45, 50-page paper that I'm co-authoring with my colleague Samantha Borton, who's speaking a bit later. Part one will focus on the 2007 and 2017 UK mutual evaluation reports. Part two will provide a little bit of evidence on a new paper, which is out later this year in Legal Studies, that looks at terrorism, financing and fraud, and how that's become one of the most important funding streams for terrorists. And then part three and part four critique the exchange of information between Revenue and Customs and the UK security services. And then lastly, some recommendations regarding developments in the UK for the Joint Money Laundering Intelligence Task Force, or JMLIT. I won't go through all of those with you, but if we go back to 2007, this is what the UK government has done recently to address some of the criticisms within the Financial Action Task Force's mutual evaluation report. And I forgot to put my timer on, so that's a very embarrassing way to start. We've got the new Bribery Act, Financial Services Act. Lorenzo mentioned the Law Commission report recently, which obviously he's contributed to, the Economic Crime Plan. So a plethora of reports, a plethora of legislation. But of course, one thing that appears to be not discussed within that is the Law Commission's report on the bottom of that screen, released in 2019, contains 19 recommendations as to how the UK can improve the use of suspicious activity reports and the exchange of information. So based upon the plethora of reports and laws, the Financial Action Task Force concluded in 2018 that the UK has the best anti-money laundering and counter-terrorism financing laws anywhere in the world. And that was mentioned by John Glenn, then Economic Minister for the Treasury City Minister, and the current Minister of Defence, Ben Wallace, who applauded the UK's efforts to tackle financial crime across the sector. But if we break that down, how does that apply to exchange of information? Well, the Financial Action Task Force concluded the UK was compliant with all recommendations relating to exchange of information. So briefly, recommendations 3, 30, 31, which look at the national coordination and cooperation between law enforcement agencies in the UK, and then moderate to high levels of effectiveness in relation to outcomes 6, and then immediate to 7 and 9. So they link into money laundering and terrorism financing investigations. But if we look at the fraud typology, one of the things you have to remember is that a lot of companies now began to question the UK levels of compliance with the recommendations. And we got reports by Hmrc, parliamentary inquiries and so on. But if we drill down in relation to fraud, there's a lot of literature written on how fraud has always been linked into terrorism financing. We got reports by the International Monetary Fund, Europol, Financial Action Task Force, US Treasury Department, that fraud has been a very effective mechanism for terrorists to gain access to funding. So if we drill down a little bit more, this is the sort of current typology that I've identified as part of one of the externally funded projects with our partners at Synologic. So there's roughly a, if my maths is correct, 12-part process for this. You've got passport fraud, immigration fraud, identity theft, what we call financial fraud in terms of access to credit, tax fraud, I'll focus on in particular, benefit fraud, and recently we've seen student loan fraud with Salman Abedi and Yahya Rashid. We've also seen several convictions in Europe and America for people trying to misuse their student placements. Insurance fraud, to a less extent, that becomes to be more prominent in Spain and Portugal. The non-profit sector, very well documented. So if that interests you, please have a look at the work of Professor Jimmy Garul. Mortgage fraud, counterfeiting, and of course, trade-based fraud. But for the purpose of the next 5 minutes, tax fraud is perhaps the most relevant part. So if we look at some of the cases in the US, you've got several convictions in the last 7 years. You've got cases from Jonathan Paul Jimenez in 2013, Michael Todd Wolf, to more recently the Hockin Betcher Gould in 2018. So clearly there's a well-documented, rich example of cases in America that indicates that tax fraud has played an important role in relation to funding terrorists. Other countries that we've also discovered cases in will be Spain, Sweden, Germany, Denmark, Italy, and of course the UK. Now, I can't go through all the cases in detail because I've only got a 10-minute slot with you today. But what's important is within the UK, you've got research that suggests that the Ulster Volunteer Force, the Ulster Defence Association, and the IRA would regularly benefit from up to £28.5 million a year from a variety of tax fraud schemes. You've also then got evidence within the UK. A report in the Telegraph in 2019 from Williams indicated that Al-Qaeda and ISIL had obtained up to £80 million, so 10% of an £8 billion VAT fraud scheme to partly funnel terrorist groups in Al-Qaeda and Afghanistan. So there are no reported cases on this. So I contacted the journalist 2 years ago, just at the start of lockdown, had a conversation, and he indicated that there's a court order which does not allow anyone to discuss who was actually being prosecuted or convicted, I'm assuming for national security reasons. So this then raises the question, how does this link into exchange of information? So what we have found is that if you investigate in some detail of the terrorist attacks in London on the 7th of July, the official government inquiry emphasised that greater emphasis should have been put on those suspected terrorists who appear to be petty fraudsters. So if you use that sort of typology of fraud, you can see how here there appears to be a missed opportunity between HM Revenue and Customs and the UK Security and Intelligence Services. So HM Revenue and Customs connected the fraud of one of the 7/7 bombers, Shahad Tanweer, but HM Revenue and Customs were prevented from passing the information on to MI5 and MI6 due to taxpayer confidentiality. So I think that's an interesting part to remember. Yet there are multiple laws which allow, don't compel, but they allow the facilitation of information exchange between HM Revenue and Customs and the UK Security and Intelligence Services. For example, Section 19 of the Anti-Terrorism, Crime and Security Act, the 2008 Counter-Terrorism Act, and this is not the first time Hmrc have been criticised for not sharing information. So again, please have a look at the slides. I'm sure Costa will circulate for you. Click onto the blue link and have a look at the Parliamentary Accounts Committee report. So how can we solve the problem? Well, one of the recent developments in the area has been the creation of GIMLET in 2015 by the then Home Secretary Theresa May. So GIMLET offers a distinct approach where the exchange of information is on a voluntary basis, and it tries to identify suspicious transactions for terrorism financing. It seeks to enhance information sharing, and importantly, it's a fantastic example of called the Financial Action Task Force of best practice of how the public sector can cooperate with the private sector. These have been supported by the 2017 Criminal Finances Act under Section 10, which allows information gateways and facilitates information exchanges between the government departments and also the private sector.
Just 1 minute left, Nick.
Okay, I'll do my best, Lorenzo, sorry. So very briefly, the membership includes the NCA, HM Revenue and Customs, that should not be there, the SFO, and of course, the large UK financial institutions. So briefly, the Crime and Courts Act, remember, creates these information gateways under Section 7, and it allows the NCA to communicate and assist individuals within that particular role. So one example of this working is the London Bridge attack in 2017. Within a few hours, GIMLET could identify, crucially, what credit card was used to actually hire the van. And the Financial Action Task Force concluded that this was crucial in attempting to identify who the attackers were and that there wasn't a broader network. So in terms of analysis, GIMLET's been very useful at developing and helping investigations by the police. 150 arrests, but problems remain. lack of technology, lack of investment, which FATF have remembered, and remember, limited scope of its membership. So conclusions, very briefly: clear link between terrorism financing and fraud, clear link with tax fraud and terrorism financing, and the exchange of information is a significant issue that needs to be redressed within the UK. So sorry if I ran over, Lorenzo, but that should hopefully give you a brief overview.
Thank you very much, Nick. That was phenomenal. I do have a couple of points on these to pick up, but later on maybe will be the time for discussion. So in the meanwhile, I just want to give the floor now to Sam Bolton. Sam is going to talk about archaic tax evasion offences and whether they can create unintended outcomes for tax enforcement and compliance. Now, I know very well Sam as well, but I want to give a formal introduction for the benefit of the audience. Sam is a lecturer in law at the University of the West of England, Bristol, and she's also a fellow of the Higher Education Academy. She teaches on various modules at both postgraduate and undergraduate level, including the law of financial crime and regulation, international financial crime, and research methods. So very avant-garde modules, I would say. Sam's research interests lie in the law of financial crime and particularly the law pertaining to tax evasion and money laundering. So you can see how she's particularly fitting this panel. She regularly publishes and presents her research in these areas. So we look forward to hear from you, Sam, and thank you very much for joining us today.
Thank you, Lorenzo. I'll just share my slides with you. So hopefully, there we go. So today I'm going to be providing an examination of the UK's tax evasion offences, and I'm going to be arguing that the outdated legal framework often leads to unintentional outcomes when it comes to tax enforcement and compliance. So I'm going to begin by providing a bit of background information on how the UK has historically used the criminal justice system in addressing tax evasion. I'm then going to provide a very brief overview of UK tax evasion offences, including corporate liability for tax crimes. And I'm then going to examine how those offences are used in practice and how the outcomes have often been not what was intended from the outset. So I thought it would be helpful to explain for those who perhaps aren't familiar with the UK's framework that historically very little use has been made of the criminal justice system in addressing tax crimes. So hopefully, as you can see there, by 2007, only 2 in 1,000 cases of tax evasion were prosecuted in the UK. And this is because Hmrc, the UK's tax authority, often prefers to use civil investigation procedures, which it regards as much more time and cost effective. And so because of this, criminal investigation is supposed to be reserved for cases where the conduct involved is such that only a criminal sanction is appropriate. In other words, the most egregious cases, the ones that cause the most significant harm. So I do apologise in advance for this slide. I usually would send my students to sleep if I put this many statutory references on one slide. But the reason that I've done this today is just to try and illustrate the sheer volume of tax evasion offences. So in the UK, we have offences for specific types of taxation and also different types of behaviour. We also have more general financial crime offences that can be applied to tax crimes like fraud and money laundering. However, despite this huge raft of statutory offences, one of the most commonly used offences to address tax evasion is actually the common law offence of cheating the public revenue. This offence has been in existence for centuries, and one of the reasons that it is so frequently used is because it is so broad and flexible. So as you can see from the case of R&Less there, cheating the public revenue was defined as any form of fraudulent conduct which results in diverting money from the revenue. So as David Ormerod has correctly noted, the fact that this actus reus is so broad means that the mens rea element of tax evasion offences, typically dishonesty, is often the only live issue at trial, as he puts it. However, those of you who are familiar with English criminal law will know that dishonesty is not just used in tax evasion offences, but also offences such as theft and fraud, and it has caused difficulties for a long time. The reason why dishonesty is regarded as problematic is because, unlike other forms of mens rea, the judiciary have declined to define it, and instead they leave it up to the jury to decide whether the individual has been dishonest according to the ordinary standards of reasonable, honest people. However, a number of academics have noted that there are real issues in leaving dishonesty to a jury. And Ormerod in particular notes that it might be quite straightforward for juries to identify dishonesty in straightforward cases of theft, for instance. However, they often find it difficult to do so in quite complex tax evasion cases, where they're often unfamiliar with the context in which these activities take place. And for me, the problems with dishonesty have been at least implicitly recognised by the introduction of a strict liability offence for offshore tax evaders. So in terms of enforcement, hopefully you can see there that over the past few years, so from 2010 to 2015, Hmrc were tasked with increasing the number of prosecutions for tax evasion from 165 to over 1,000. However, the National Audit Office found that these targets led Hmrc to focus on low value cases. And indeed, the National Audit Office found that Hmrc pursued a criminal investigation for a tax loss of a mere £250. So because of this, Hmrc were tasked with increasing the number of prosecutions, particularly for serious and complex tax crime by wealthy individuals and corporations, to over 100 a year by 2020. However, and there's always a however, as we can see from this slide, Hmrc didn't really come close to that figure. And actually, the number of prosecutions have dwindled, and we have not seen an increase in high value complex prosecutions. Similarly to individual liability, when it comes to corporate liability, again, we are depending on quite outdated, quite archaic legal doctrines. And many of you will know that the Law Commission are currently reviewing the Identification Doctrine, which is the method used in the UK to attribute criminal liability to corporations for offences that require mens rea. So the Identification Doctrine essentially requires that the very senior managers of the company are involved in the particular criminal offence. However, the Law Commission has noted that this often makes it easier to convict smaller companies in the UK as opposed to large multinational enterprises with quite diffuse management structures. So we perhaps saw this in the HSBC Swiss scandal, where HSBC helped over 1,000 UK clients to evade taxation. I'm sure many of you here know that HSBC Swiss was not just a passive recipient, it provided clients with anonymous debit cards and also wrote to them about how to get around EU law in this area. However,
just 1 minute.
Thank you. However, HSBC did not face any criminal action in the UK. So because of this, we've seen the introduction of failure to prevent offences which apply to corporations where their employees facilitate tax crimes. However, again, we've seen 0 prosecutions to date, and there's also been limited awareness of this offence, particularly by smaller organisations. So this potentially leads to the conclusion that actually, again, it's going to be the smaller companies who are most at risk of falling foul of the failure to prevent offences. So in conclusion, the use of tax evasion offences in the UK has perhaps not turned out as was originally envisaged. And for me, the fact that we've put more funding into this, that we've put more emphasis on enforcement on targets, and we're still not able to tackle the high value, the serious offenders, suggests that there's a problem within the legal framework itself, and that it's in need of modernisation. Thank you.
Fabulous. Thank you, Sam. Thank you very much for this. This was really interesting and very much interesting also for my personal research, which focuses exactly on these unintended effects. Again, as I said, for Nick, I would like to ask some questions, but maybe we can leave it to later. Now, the next person to speak will be Rachel Cook. Rachel has collaborated to the VIRTEU project, particularly in the workshop dedicated to the United Kingdom, providing phenomenal insights that have been recorded and included in the findings of the research. Rachel is going to talk us about the lessons from the COVID-19 relief schemes, which is another big example of a policy or a scheme that can have unintended consequences. So I assume Rachel is going to talk a bit about that. I look forward to this. Now, by way of presentation, Rachel is a criminal lawyer at Peters & Peters Solicitors. She provides many advice on crisis management, and she has a particular expertise in criminal tax litigation and fraud, money laundering, bribery, and corruption. She acts for corporates and high net worth individuals, many of whom are subject to multi-jurisdictional investigations. She's been recognized by Legal 500 as a key contact for tax litigation, and by Who's Who Legal as a future leader in investigations, and by Chambers and Partners for expertise in white-collar investigation and complex tax cases. So, Rachel, thank you very much for joining us. The floor is yours.
Thank you. So, like its foreign counterparts, the UK government's pandemic relief schemes were implemented quickly to protect businesses. And the UK's tax authority, Hmrc's initiative, were by necessity rapidly devised and implemented with little opportunity for scrutiny or oversight. However, the speed of the implementation and the sheer level of demand for these schemes created opportunities for exploitation. The sums involved are huge. The UK government provided £100 billion worth of loans and grants to over 1.5 million businesses, as well as over 16 billion in business rates relief and a VAT cut for some industries. Given the urgency to support businesses, ordinary controls were bypassed. The risk of exploitation was obvious and it was known at the time, but it was balanced against the need to provide financial assistance quickly. The consequences of this rush job was to create opportunities for criminals, both organised gangs and the opportunistic but otherwise law-abiding taxpayers. And it was a unique, real-life experiment on a vast scale. The offending has been described as potentially the biggest fraud in British history, and it shines a light on human behaviour and the importance of effective controls and deterrence. The victims were as diverse as the criminals were. The government is, of course, a victim, having been cheated of public revenue and subject to various frauds. There are some criminals that use the COVID schemes as a ruse to target individuals and extract personal information through social media or text message scams. Society as a whole was also a victim, as criminals and potentially terrorists use the schemes to obtain funds illicitly, as well as to conceal and launder the proceeds from other crimes. The exact extent of the wrongdoing is still not known, and it may never be. So in the UK, there is a retrospective exercise underway to identify and enforce against this offending. There is also dialogue on what went wrong and how it could have been avoided. I know I only have 10 minutes, so I'm not going to consider all of the relief schemes, but I'm going to comment on some aspects and what has been done since, and some of the lessons that might be learned generally. So the Bounce Back Loan Scheme helps small and medium-sized businesses to borrow between £2,000 and £5,000 at low interest rates that was guaranteed by the government. The banks had suspended their normal due diligence processes for considering loan applications and for considering whether applicants had the ability to repay their debt. The information provided by the applicants was accepted at face value, In the early stages, most banks did not even have processes in place to identify duplicate claims. A few months ago in April, the UK's House of Commons Committee of Public Accounts considered this scheme and reported that an estimated and eye-watering 17 billion of taxpayers' money that was given out in loans will be lost. 4.9 billion of this is as a result of fraud. The committee considered that fraud within this scheme was well outside what would normally be considered tolerable, although they didn't say exactly what level of fraud would be tolerable. And this month, an official evaluation of the government-backed pandemic loan schemes was commissioned by the British Business Bank, which administers some of the loans. And it found that between 38 and 45% of businesses surveyed said that they would not have sought that debt financing in the absence of the government support. And many of them sought the funding to become more resilient against future risk, rather than, as it was supposed to be, because of immediate risk. There are extreme examples of organised criminal activity. 7,000 companies were registered to just 5 addresses in London that made claims to the furlough schemes between December 2020 and June 2021, claiming up to £473 million between them. So you can see that how the relief schemes have been exploited by professional criminals, but they were also exploited by ordinary individuals too. The horse has now definitely left the stable, and there is little point in bolting the door. Relief schemes are mostly no longer available, and as the immediate urgency passed, further checks and balances were implemented by the private sector to help mitigate the risks of fraud and money laundering. We're left with the message that controls and checks are essential, and this applies to other tax legislation and policy. To retrospectively deal with this wrongdoing, the government has invested £100 million in the Taxpayer Protection Task Force, consisting of about over 1,000 Hmrc staff to target the COVID relief fraud. And it's expected to recover about £1.5 billion from fraudulent or incorrect payments by 2023. This is a large amount, but perhaps not when compared to what the estimated fraud is. To date, Hmrc's fight against furlough fraud, the majority of the arrests have been made on the basis of suspicion of cheating the public revenue, VAT evasion, and money laundering offences. Some have speculated that the furlough epidemic is the perfect opportunity for Hmrc to use this corporate offence that was Sam mentioned before, the failure to prevent the tax evasion, which is in section 45 of the Criminal Finances Act 2017. And it would enable prosecutors to go after larger offending corporates without first establishing the mens rea, or as she said, the directing mind and will of the company. And the use of this offence would be a very interesting development. To assist Hmrc in its fight to claw back defrauded funds, other newish legislation could help. The Finance Act 2020 provided Hmrc with a number of civil remedies, including the right to charge 100% of tax on wrongly claimed furlough payments, and the ability to make a company officer pay a proportion of the company penalty where there has been a deliberate act or failure that can be attributed to that individual. The Act also creates an obligation on businesses to notify Hmrc of any wrongly claimed payments, and the government has also sought to incentivise corporates to report themselves. Hmrc sent thousands of nudge letters inviting employers to make use of an amnesty, now closed, to correct inaccurate applications. Making linked non-offending people civilly liable for another's wrongdoing is also another useful tool. Now, for partnerships, if only one partner knew that a claim was incorrect, all other partners will be treated as if they also knew. The government was not fast enough in seeking industry feedback in the rollout of the schemes, and they've missed that opportunity. However, enforcement authorities should now mine information from professionals who supported those who misused the schemes. The banks that provided the government loans are one good source of intelligence. Others include auditors, financial advisors, accountants, and solicitors, who in some circumstances have obligations to report suspected wrongdoing. Tax authorities should reach out to the industry for intelligence. I know that whistleblowings are being dealt with later on this afternoon, so I'll simply say that whistleblowers have formed a crucial role in identifying COVID relief offenders. There has been some criticism on this reliance, though, especially around the issue of financial incentives. Hmrc has used other new tools, such as account freezing orders, to target funds held in bank accounts. These are powerful weapons in Hmrc's arsenal and enabled it to seize funds of suspected criminals and their associates for amount as low as £1,000. The threshold for obtaining an audit is extremely low. HMRC should continue to use its effective tools. In an ideal world, there should be no moral ambiguity within the general public. Clear policies and legislation complemented by advertising should instill the necessary awareness of the effects of the crime. Anyone who is undecided on whether to take the risk should be under no illusion that doing so has consequences. Given the current climate, it makes sense for HMRC to focus on recovery rather than arrests. The Treasury needs money. It also makes sense to focus on recovering large amounts that have been lost in the bigger frauds rather than on individuals who committed the low-level frauds. The importance of skilled investigators cannot be underestimated. The Taxpayer Protection Task Force has been criticised. According to a Times article, most of its staff are not experts and do not appear to have been drawn from the private sector or from any other civil service departments. It's been said that the task force simply does not have enough highly skilled and experienced fraud investigators for the scale of what they have to deal with.
Sorry, Rachel, the time is up. If you can conclude, please.
Prosecutions also should work as a deterrent. Those who are prosecuting should be adequately qualified. So to deter crime, there must be a punishment. It requires proper infrastructure for investigating the activity and enforcing penalties where they're appropriate. Thank you.
Thank you. That was a very, very rapid closure. Thank you very much. I appreciate that. Thank you, Rachel. Very interesting. And again, I do have some points, but I see that questions are popping up in the chat, so I might not have time to ask mine. So the final speaker for today, for this session, is Dilpreet Danoa. Dilpreet is a barrister practicing from Field Court Tax Chambers. She has a diverse practice in revenue law, across both indirect and direct taxes, nationally and internationally. She advises and represents a wide range of clients on tax-related matters, in addition to undertaking commercial litigation. She has appeared in all levels of court up to the Court of Appeal, as well as arbitrations. Dilpreet holds an MSc in tax law from the University of Oxford, and she is also a qualified chartered tax advisor. Like Rachel, Dilpreet also participated to the UK workshop for the VIRTEU project, and we're very grateful for her phenomenal contributions. This is why we thought it would be very interesting to hear from her in this conference as well. So Dilpreet is going to talk about the knowns and unknowns of VAT fraud and evasion. So with that said, Dilpreet, up to you. Thank you very much for joining us.
Thank you so much, Dr. Pasculi, for that very, very generous and kind introduction. So good afternoon, everyone. And first of all, an enormous thanks to the organisers, and in particular, Dr. Pasculi and Dr. Grasso, and of course, Stephen Holden, for putting together this fabulous and incredibly thought-provoking conference. It's a real pleasure to be here with you all, albeit virtually today. And the topic I wish to explore, as Dr. Pasculi mentioned, is that of VAT fraud and evasion, and in particular, the knowns and the unknowns, as I call them. So like any tax, VAT is vulnerable to evasion and fraud, and it's the specific nature of VAT that intrigues me in terms of the cases that land on my desk and the matters I see that come forward for litigation or for dispute resolution. And it's the credit and refund mechanism that is often the trigger point, and it offers unique opportunities for abuse. And I use that term quite broadly. And about a decade or so ago, it had become quite an urgent concern in the European Union. And what I want to briefly consider today is sort of the main forms of non-compliance that are distinctive to VAT, considering how they can be addressed, and assess the evidence in terms of the extent that this is shown throughout other global models of VAT. And the key claim that is often made by proponents of the VAT system is that it is a particularly effective way of raising tax revenue. You tax transactions, you tax them in a staged way, and you continue to collect revenue at every stage. You incentivize businesses by allowing a sort of credit and refund mechanism, so your inputs and outputs. But Professor Rita de la Feria, who was one of my professors, made a very apposite point in her paper entitled Tax Fraud and the Rule of Law, and it's a paper that was published in 2018, and I would strongly encourage those of you who haven't read it to go away and read that. And what she says in there is, and I'm quoting directly now, tax fraud is by its very nature difficult to measure, And although tax administrations commonly use adjustments of unreported activities, these are rarely made public. The methods used vary widely and are often unsuitable. Now, from my perspective, there is in fact a tax gap. It's very hard, particularly with VAT, I'm calling it the VAT gap now, to determine whether the failure or the missing VAT as it is a result of non-compliance or revenue loss as a result of fraud and evasion. And increasingly, as we go forward, the lines are becoming quite blurred. Rachel Cook just touched on it in her discussion now about the COVID-19 schemes. And the numbers tell a story that the size is indicative of the scale of the problem. And so I would argue that the VAT gap shows some concerning evidence in respect of how the legal framework is in fact being abused. So what do I mean by this? The VAT gap, so when I talk about it, is the overall difference between the expected VAT revenue and the amount that's actually collected. So the UK, for example, on the government website, when I was checking this morning, just to make sure I was up to date, estimates there to be £9 billion for the tax year 2020-2021 by way of the VAT gap alone. So we're not looking at other taxes, purely VAT alone. So that equates to about 7% of net VAT total theoretical liability. Now, the government website showed a sort of rather positive spin and said, it shows a downward trend between the tax years 2005 and 2006 to 2020. But I think Rachel raised some very apposite points in her talk, which is, well, we're yet to see what the fallout from the COVID-19 relief schemes were and how COVID will really impact the next tax year. So that's certainly one to watch. And I think that the problem is so concerning and has been for some years, as I mentioned, particularly with the EU, that since 2009, the European Commission has published almost annually a report on the VAT gap. What the most recent report of last year shows is that EU member states lost an estimated 134 billion euros in VAT revenues in 2019. And although that's extremely high, they say it's been improving over the course of the last 4 years, but again, we're yet to see the full extent of the COVID-19 pandemic. And Paolo Gentiloni, the Commissioner for Economy, sort of set it out in a rather sobering thought, actually. He said, this year's figures correspond to a loss of more than 4,000 euros per second. And he said, that's an unacceptable number of losses for national budgets, which means that, legal systems and frameworks are being abused. So in the second half, what I want to explore here very quickly is what is triggering the VAT fraud. And in my submission, it's the legal framework and the specific nature of VAT as a tax collection mechanism. At the heart of VAT, as I've said, is the credit mechanism. So with tax charged by a seller available to the buyer as a credit against their liability on their own sales, and if it's in excess of the output tax due, that which is then refunded to them. And the legal framework is intended not to create a tax burden on businesses, and so it allows a refund of the input tax. But this creates opportunities of several types of fraud, which are particular to VAT. The first is, of course, the false claims for credit or refund. The second is the credit claimed for VAT on purchases that are not creditable. And the third is, of course, bogus traders or missing traders. And so there is some argument also to say that VAT fraud interplays with other fraud as well. And traditionally, the inclusion of consumption taxes, so VAT, retail sales tax, RST, in a tax mix is seen as spreading the risk of enforcement, with VAT potentially being less susceptible to fraud. But I would argue that actually the multi-stage collection process, although from a legal framework on paper seems to make quite good sense, because you can almost account for every stage of the transaction. The problem is when the chains become so long and so complex, actually the law potentially has not been designed to combat that level of complexity that really starts moving towards some quite serious and egregious fraud. And so the law is technical, and technical terms require finite definitions. That's part of the problem. And so, for example, we see a range of a series of offences, as I've said. So some are less serious, those where the taxpayer's deliberately chosen to keep their turnover profits below the registration threshold, the threshold that obliges them to register for VAT. And so you see what's called a bunching effect just before that. They decide not to register, so they're not liable to pay VAT. fine. At the opposite end of the spectrum, you have those who engage in deliberate schemes such as carousel and MTIC fraud. And with e-commerce on the rise, invariably, I think that we're going to see some real problems there, particularly in the world, the esoteric world of crypto. So what are the legal implications for a VAT design? It's clear, in my view, that the design of a VAT can significantly impact its exposure to evasion. And so key design aspects really that we must think about in our legal frameworks going forward, things like rate differentiation in the UK, in the European model of VAT, we have we have the reduced rate, we have the zero, so we have a 5% reduced rate in the UK, we also have a 0% rate, we also have exemptions. What levels of VAT are we talking? Economists tend not to like exemptions so much. They say, this creates economic distortions, but exemptions ultimately don't allow you to make claim for a refund. So potentially that's quite a positive. There are, of course, the registration thresholds. There are some countries in the European model that say the moment you begin to make any sort of profit or turnover, you are obliged to register, so you don't get that bunching effect. Thinking more carefully in our legal systems and rules about the simplified and lump sum schemes for small traders, the timing of payments and refunds, these are the sorts of implications and the legal framework tools that we probably need to be thinking about, particularly when we're talking about VAT fraud, VAT evasion, on the deliberate end, and then the non-compliance. And I think it's really important to distinguish between the two for the reasons that both Dr. Borton and Rachel Cook touched on, in terms of how then that is targeted by Hmrc and the authorities as either a civil crime or under a civil penalty or under the criminal regime. And so broadly, I think there are two different types of solutions. The first is, of course, an administrative response, do things better, and if needs be, adapt the legal framework. One of the key focuses is, of course, registration, but looking in particular at what is it that's triggering fraud. And if the fraud is so large and on these wide-ranging scales, it's potentially about how does one go about making those due diligence systems more effective. In addition, the use of the reverse charging mechanism for business-to-business transactions. I know I've got one more minute left, Dr. Pascali. Placing the VAT liability on the buyer rather than on the seller. The adoption of a system of VAT accounts, so maintaining separate accounts in the business purely for VAT purposes, but that becomes an obligatory element in your legislative regime, and the compulsory use of third parties to guarantee VAT payments. As I mentioned, e-commerce is an increasing issue, so we can use the legal framework to tackle this prospectively as a problem rather than retrospectively, thinking more meaningfully about the sanctions which are available. So, there is, of course, the ne bis in idem principle debate, that which has been tried already can't be tried again on the same fact, but thinking more meaningfully about, well, actually, if I come at you with a civil charge, and that's only going to be a penalty, you might think, well, that's worth it. Whereas actually a criminal sentence of 7 years and charges under the Fraud Act, and I think Dr. Borton had a wonderful slide there with all the statutory mechanisms under which you could be caught, thinking more meaningfully about how we use those. And so with that very, very speedy wrap up, I'm going to end it there. But I think that VAT as an enormous revenue collector, such an effective revenue collector, can be used much more effectively as a tool to tackle some of the most serious tax avoidance and evasion schemes that we're beginning to see.
Fabulous. Thank you, Dilbret. That was really interesting to hear about how law design or design of taxes can actually facilitate criminals, and I would like to expand upon it, but I think we do have a couple of questions. So before I move to my own remarks or comments, I think it would be great to give a bit of space for the questions so you can respond with all the time. Well, first of all, I see that Stephen just raised his hand. So Stephen, if you want to speak, go on, ask your questions so they can reply directly. Thank you.
Hi, thank you very much. And they were all excellent, very thought-provoking presentations. I think from the aspect of what Dilpreet was just talking about, with the idea of this quite substantial and significant VAT gap and the expectation of what we should be receiving and what we actually do and how that operates European-wide. Would there be any kind of practical recommendations, not so much aimed at policy reform, but things that maybe like law enforcement or investigators or agencies may implement to try and address that in a kind of practical and meaningful way?
Thanks, Stephen. I think it's a really good question. It also probably requires a rather long answer. So very, very briefly, I'll see if I can answer it. But I think it's using the agencies we have at our disposal. So immediately, the ones that come to mind are invariably Hmrc, so our Revenue Authority, but also Treasury, working with the Law Commission, I think, to develop quite a meaningful report that would have suggestions to tackle, in particular, VAT evasion. Because at the moment we discuss things like the GAR, we all agree as a broad concept, tax evasion is not a good thing, but how we can do those in terms of more practical things, such as saying, well, actually, do you know, our VAT threshold or the obligation to register is too high. Let's lower that, or, you know, let's do it. I think, and I apologize if I'm misquoting this, but I think in Portugal, it's the moment you make a single euro of taxable turnover, it's the moment you make a €1 of turnover, that is taxable, you are liable to register. You know, do we avoid bunching? Do we avoid non-compliance by taking stands like that? And, you know, and I suppose bodies and agencies like the Law Commission, like Hmrc, like Treasury, would then be able to look at data and say, well, actually, do you know, it won't make a difference if we change the VAT registration threshold, or actually, we might be able to tackle some of this VAT gap that we've got by lowering a threshold, for example, by not having a mandatory and then a voluntary option. We've just got a mandatory one, and it's the moment you start making any kind of turnover. So I think it's probably a question that requires a more meaningful answer, but I do think it requires a far more coordinated approach, and thinking about how we can use our civil penalty regime alongside the criminal regime, which is of course a lot more scary for taxpayers and those wanting to engage in that sort of fraud, and leveraging of course the exchange of information that Professor Ryder mentioned with other tax authorities, because very often, particularly for the large scale fraud, we're talking about cross-border fraud here. We're not just talking, you know, domestic fraud and somebody sort of, you know, doing it between the counties of the UK. We're talking really large scale international fraud here. And so that willingness of tax authorities to say, right, well, we're going to really work hard with other revenue authorities and our counterparts to obtain the right information, to prosecute the right people in the right way.
Lovely. Thank you, Dilpreet. Thank you, Stephen, for the question. We have two questions now that fit very well the rest of the panel, because the first one is for Nick and Sam, whereas the second one is for Rachel. So I will read them out, starting from the first. So these are great presentations. My question would be, given the point made by Nick, which is that we should see lower level financial crimes as a way we can get at bigger crimes, and the point that Sam is making, that Hmrc look at efficient revenue raising by not applying criminal law and using civil law procedures instead. So given these 2 points, how do we change the culture at Hmrc and the Treasury so they see the wider role in promoting justice by using criminal law more frequently? So how do we change the Hmrc culture in such a way that they use criminal law more frequently?
Take that one first, Sam.
I was going to say, I'm going to jump in before you beat me to it. So I think Nick and I have had lots of discussions about how a statutory objective for Hmrc we think would be a really good idea. And I know that Tax Watch themselves have also had similar discussions. And Nick and I think this would be helpful both in terms of tax evasion and addressing that financial crime, and also in terms of encouraging things like the exchange of information. So, for instance, this could be achieved quite easily by an amendment to the Commissioners for Revenue and Customs Act. At the moment, their almost sole objective is revenue collection, and you could perhaps envisage adding a subsidiary objective to that of preventing or detecting financial crime as well. And that would give then Hmrc further scope, further justification to actually proactively exchange information. It would hopefully also balance out some of those enforcement considerations that are very heavily based on revenue collection at the moment. And I think it's not to say that revenue collection isn't a good objective, of course it is, but actually there just needs to be a bit more of a balance there. And I think we both think a statutory objective for Hmrc would really help with that.
Thank you. Thank you, Sam. Nick, do you want to add something?
Yeah, and I think if we take a little bit of a step back and just look at HM government policy, I'll use the figures 40 and 54, so apologies if you heard this from me before. 40% of all UK crime is fraud-based, and of that 54% is cyber-enabled. Yet we have disparate policies between the Home Office, the Cabinet Office, and we've been promised a fraud policy for a number of years. It's been delayed, a bit like my marking, delayed. So I genuinely think that the various aspects of HM government need to get their head out of the sand and realise that fraud is a problem, whether it's, as eloquently put by Rachel and Dilpreet and Sam in their presentations, if it's COVID fraud. So to me, there needs to be a bold statement from government with viable funding, and the enforcement mechanisms exist. We all know that there's DPAs, we all know there's prosecutions, and sort of, we won't discuss failure to prevent under the Criminal Finance Act because there aren't any. But to me, it comes down to appetite. It comes down to, what are the government prepared to do? And, based upon what I've read and conversations with think tanks and MPs, I don't know what that is. So I think it's just a question of rattle the cage a little bit and let's see what we can do. We've had lots of 12 DPAs, but, just look back at HSBC, as Sam mentioned, the FinCEN papers, the Paradise papers, I could go on and on and on. So where are the prosecutions? Where are these facilitators who encourage tax evasion? And of course, the fraud policy, if you look at access to convenient credit in the UK, I can get my credit card extended, double to 16 grand a year. I haven't even got to ask for it. It's an open door for terrorists. So with no fraud strategy that doesn't mention terrorism financing, and a terrorism strategy that doesn't mention fraud, there's a bit of a fault there. So I'm half glass full, I'm afraid.
No, but it's interesting, and it seems to me that from all the comments I'm hearing, that there is probably a political short-termism in which we react to situations rather than having a vision, a plan on a long term on how to structure all these issues together. It seems that there's a lack of a systemic method to address all these issues in a clear fashion. But anyway, the second point, which is the question for Rachel, is actually quite connected to the issue of better laws or better enforcement, which has been touched upon by some of you in the answers. So, question for Rachel, I'm reading it out. The UK Treasury has allocated an additional £600 million to the Department of Work and Pensions to counter increases of benefit fraud during the pandemic. The Taxpayer Protection Task Force costs about £150 million. Do we really need more legislative remedies, and should we just not be investing more in enforcement? If there is, if it is them, the ones, would they combat benefit fraud? Sorry, I think this sentence is a bit tricky. But anyway, what can be the justification for not spending more in going after the COVID criminals? So it's all about the investment. Where do we need to invest? And do we need to spend more, or are we spending too much? So basically, these are the main takeaways I take from this question.
Well,
if the money is there, yes.
My response would actually touch on the previous question, because I think that Hmrc are hesitant to bring prosecutions because they're not easy to bring, and they've had their nose bloodied in the past, and it can actually act as the opposite of deterrent. If people are going to court, Harry Redknapp and other names kind of come to mind, and they get away with it. I'm not saying that he personally did evade tax, but obviously that's a high profile case. So I think that, and going after the low-hanging fruit, the small tax evaders, isn't necessarily going to make any difference to the high-level tax evaders who are sophisticated and doing it on a large scale. Stopping one won't deter the other. In terms of what the DWP investigating benefits or investigating COVID, I would say that COVID hopefully, is a one-time event. This isn't COVID fraud relief schemes. We're not expecting them to be continuing on for 10, 20, 30 years. Benefits fraud, it's an ongoing thing. Prosecuting those people hard will act as a deterrent for the future. There may also be a political element in terms of the government strategy on who they want to pursue. And the fact that, you know, they don't necessarily want to be reminded of some of the holes in their own implementation of their COVID relief schemes, which they can't necessarily be criticised for because of the urgency of the situation. I personally don't think we need to change the legislation. I do recognise it is hard to prosecute people. There is the issue of dishonesty, but if you're going to put someone in prison for 5 years, it should be difficult, in my view. And but if you want to be able to bring a successful prosecution, then you are going to have to involve lawyers at an early stage. There's no point having poor investigators who are going to build a poor case and take it to court. So the money does have to be spent, but it's got to be spent correctly. There, you know, as Sam said, we have got a lot of laws. We've got the new corporate offence. They are rumbling along in the background. It's changed over time, but it's between 10 to 20 investigations that are going on in the background. We haven't seen any prosecutions yet. That is going to be a good deterrent when they do bring them, because not only is it going to stop people evading because companies are not going to help them, but it's going to change the corporate culture of other corporates who are then going to start putting their kind of own compliance programs in place. So, you know, whether it's the DWP or Hmrc, COVID fraud and so on, you know, the actual figures that are being spent, they're fine, they're all large amounts of money. They've got to be spent correctly in order to be effective though.
Thank you very much, Rachel. Dilpreet, do you want to add anything on this before I conclude?
Yeah, thank you. It was a very small point. I completely agree with what Rachel said in terms of, you know, it being, you know, far more difficult to put someone in prison is absolutely the right thing. And it's a recognition that actually the burden of proof that's required, you know, for a civil system, it's on the balance of probabilities you probably did evade. Whereas in our criminal system, it is beyond reasonable doubt. So that threshold, fine, it might make it harder for Hmrc, but that requires, and I think she's absolutely on the mark when she says, well, it requires a really, really good tax investigations team at that point. And it's recognizing where strengths lie in our legal system. So rather than almost going the easy route, it's saying, well, yes, we are going to, and this is the evidence we need, and making it very, very clear that that is the route that will be pursued. And it's leveraging that sort of evidential route, as it were. And it is harder work, but it's you know, the system is designed that way for a particular reason.
Fabulous. Thank you very much, Dilpreet. Thank you, Rachel. Thank you, everyone. I have to apologize for Nick Ryder-Webb to leave all of a sudden because he has another presentation at a think tank. But thank you all. This has been phenomenally helpful, interesting, and really lively debate. So thank you very much, Costa. Again, to you now for the rest. Thank you.
Thank you, Lorenzo, so much for moderating this panel, and thank you, Sam, Rachel, and Dilpreet, and also to Nick, of course, that is not anymore with us. So let's pause the recording now, and let's meet again in 7 minutes so that we can go on with the third panel on whistleblowing.